Hi traders, this video is going to be a top-down analysis on how to trade the price action and the smart money concept. How you can combine these both strategy and make a perfect trade. Now this video is going to be a breakdown step by step on how you can do this, how you can combine the price action and the smart money concept and make a perfect entry and a perfect trade with a good risk to reward ratio. Now, if you take a look at my screen, you are going to notice that here is about 3 trades I took, right? So this very first one was a buy, and if you watch, this very first one was still running in profit. Then I re-entered the trade the second time, and if you watch, the first one and the re-entry hit full take profit. And now the third time now I'm taking a short directly on this same trade, and if you watch, this short is still running in profit. Now in this video, I'm going to teach you how you can do the same thing. How you can keep on winning consistent trade. This is just on one single market, right? On one single market, on one single pair. 3 trades, full take profit. And this video, I'm going to just teach you how I take this trade and how you can also use it. Now we have so many criteria on taking this trade. We have so many rules on taking this trade. So that's why I will advise you watch every seconds of this video. Don't skip any seconds, because if you skip any seconds of the video, you might miss a step. So now you need to first understand what is top-down analysis, right? What is top-down analysis? So top-down analysis is basically you combining multiple strategies and multiple time frames to take trades. So I believe you get that. Top-down analysis is you combining multiple strategies and multiple time frame to take a perfect trade. And this video, that's what I'm going to teach you how you can do it, right? How you should do it. Now, on your chart, just any chart, since you want to trade any market, any chart, it works on any market. So on the play chart now, on your trading view, you can easily use your mobile phone, right? So on your play chart on trading view, you want to head on to a higher time frame, like the 4-hour time frame. Now, as a trader, you need to know the type of time frame you should be trading with. As a trader, there's some time frame you should trade with, there's some time frame you should not trade with, right? So if you are a day trader, here at the time frame, you should focus on trading with this top-down analysis on price action and smart money concept. Now, just start writing the time frame down, or you can just come back, watch the video, make sure you get it. So on a 4-hour time frame, I am a day trader, right? So this YouTube channel is a day trading geek. So subscribe so you won't miss out on this type of videos. So here on a daily time frame, you need to spot, on a 4-hour time frame. Remember, 4-hour time frame is the first time frame you should be on to actually trade this strategy. So on a 4-hour time frame now, you need to spot an aggressive buy or the beginning of a trend, right? So if you watch now, there's a beginning of an uptrend at this area. So this uptrend started at this button right here. So you want to spot this type of trend. Now you have an uptrend. So, and now here's what you need to first know. Here's what you need to know. On the 4-hour time frame, you need to know what direction is the market heading, what trend is the market making, right? So this type of market now is making uptrend. This market is in an uptrend. You have a high, a higher high, a higher low, then a higher high, a higher low, a higher high. So this very market is in an uptrend, and what do you want to do in an uptrend is to look for long trades. If the market is bullish, you don't have to go start looking for short trades. Only if the market has changed character, right? So the market is bullish, spot it on a 4-hour time frame. So you want to spot the trend on a 4-hour time frame, then you go over on a 1-hour time frame. So remember, 4-hour time frame now you spot the overall market trend. First rule, hour time frame spot overall market trend. Then on a 1 hour time frame, I need to spot an aggressive buy in the market, right? An aggressive momentum buy in the market, something just like this, an aggressive push up in the market. So I believe you are seeing what I'm showing you clearly. So you can easily see this for yourself. Something like this, a push up like this, an aggressive buy. So as you spot this type of movement or this type of buy, you need to go over, highlight it, because these are the movements you want to focus on, right? Highlight it. Once you highlight it, then you go over on a lower time frame. So I've highlighted the movement, the beginning of the movement, right? This was the movement. I've highlighted the beginning of the movement. Now the next thing is for you to go over on a 15 minutes time frame to get your entry. Now before we go over on 15 minutes time frame, here's what you need to see on a 1 hour time frame. So on your 1 hour time frame, you need to spot a break of structure. So I believe you know what break of structure is. So a break of structure is basically breaking above this area. So here, this area right here is a break of structure. Now you need to spot this very break of structure right here, which is what is going to make this your 1 hour time frame spot, this your 1 hour time frame movement valid. BOS, a break of structure. This is what is going to make your trade or your 1 hour time frame trade valid. Then you need to spot a fair value gap in between the movements, right? So here now in the movement, there is a fair value gap right here. So we have our fair value gap right here. So we have our break of structure, our fair value gap. Then this movement is valid. So as you see this movement, then you head on to a 15-minute time frame. So you just mark out your fair value gap, your break of structure. Now in the 15 minutes time frame, you want to see where exactly should you take the buy. Remember what I said? The overall market is bullish and you want to take long trades. So you don't want to go trade against the market trend. If the market is bullish, take long trade. If the market is bearish, take short trades. So let's just zoom in. Let's look for what we just drew. So you can easily see where we drew our break of structure and our fair value gap right here. So the next thing is for you to go spot the last candle before the move started, right? So the move started at this area. Immediately the price was going down. Immediately it got to this area right here, started going back up, right? So you want to go over, mark out this last candle right here before the move started. So on this very movement, I want to mark out the last opposite candle, which is this very red candle right here. This red candle before the movement started, there was a pushback. Then this red candle formed right here, and the movement started going back up. So you want to mark out this last red candle from the beginning of the candle straight to the top of the candle, right? So you want to mark out the candle from the beginning straight to the top, then you want to draw it straight to your right, just like this guys. So then head on to a 1 hour time frame. So on a 1 hour time frame now, remember you are going to predict the future price, so you draw it straight to your right since you are predicting the future price, right? So once you draw it straight to your right now, all you have to then do is to make sure you take your long tool. You're going to be taking a long. Now here's what this box is being called, right? So this box right here you just drew is called the order block. You can easily name it. You can easily write order block. It's called the order block, right? So we have our order block now, and at this order block area, here's where you take the long, right? So now you want to take your long tool and then place it at the top of this order block, at the very top, right, of the order block, just like this. And then you want to go over, make sure your stop loss is slightly below the order block, just slightly below it. Then where should be your target? Your target should be at this extreme end right here. Your target should be at this extreme end, right, just like this. And there are some areas where you should put your take profit and stop loss. Your target should be the next key level. right? So let's draw our long tool to that very area. So right here now we have a 3 to 8 risk to reward ratio, right? You're risking about 4% to make about 15% on this market. So you can easily see this first. So, and if you watch how this trade beautifully smashed your take profits, full TP smashed. Now here is the second entry I took. Here's the second time I took this trade, and if you watch this closely, I took this trade at this area, right? So why did I take this very trade? Now there was a downward movement, then a pushback up, then a pushback up, right? So the market made a downward movement right here. So immediately I saw this down movement, then I know this area is extremely valid. And what makes this area valid, right? Remember what I told you? A break of structure just like this. We have our break of structure just like this. Then this type of trade now they work on a lower time frame. So on the 15 minutes time frame now, I have my fair value gap. So on the 15 minutes time frame, that's where I'm gonna enter the trade. So on the 15 minutes time frame now, I have my break of structure. Then I want to mark out the last opposite candle before the movement started. So this is not just this easy, right? So this strategy is not very easy as I'm explaining it. So there are sometimes you're gonna lose trade with this strategy. It's very advisable you master this strategy extremely well before you use it. So with what I have been saying and with what I've been teaching, I believe you are understanding it step by step or little by little, right? So if you want me to mentor you on how to trade this strategy, you're gonna need to pay $10 and I teach you personally how to trade this strategy. So if you watch now on a 15 minutes time frame, we have our break of structure right here at this top right here. Then we have our liquidity sweep right here. So if you don't have this liquidity sweep, then your order block, remember I called this box order block. That means your order block is not valid. So I believe you now get how to use this very strategy. You have your liquidity sweep, you have your break of structure, then you have your order block. Then you want to take the trade, your long position to place at the top of the candle or at the top of the order block, then your target should be at the next key level. At the next key level, then stop loss just slightly below the order block. So just like this now, full TP smash the second time, right? So if you watch why I took this third trade was this on a 4-hour time frame or on a 1-hour time frame, we have a key level, a key supply level at this top, right? So you want to mark out this supply level. So supply level is basically a point where the price is gonna get to. People are gonna start taking shots. People are gonna start taking shots or closing their long position. So you want to mark out that very level. So remember what I just discussed. Remember, this is now a down movement. This is now a red movement. So remember the first order block. You want to take long. You want to mark out the last red candle before the green candle started going up. So on this type of trade, you want to take shots. Now you want to mark out the last green candle before the red candle started pushing down. So here we have a rapid push down. We're having an uptrend, then the market started pushing back down. So we want to mark out the last green candle before the market started pushing from the beginning of the candle, right, straight to the top of the candle. Just like this, you have your order block. So you want to drop it straight to your right. So basically now you have your order block just like this. And if you watch, when the price gets to this my order block area, so this is my order block area on the higher time frame. So immediately I took a short. So immediately I saw this, I took a short. Now, what makes this order block or what makes this my order block valid is because we have a valid break of structure. This wave right here broke the market structure. If you watch this price closely, We have a break of structure at this area. We have a break right here. We have a break of structure right here. And now we have our fair value gap. We have our fair value gap right here. So with these two things in place now, this your order block is valid. And you can easily see the reason why I took this short. Now I told you the reasons why I took this long, and secondly I told you the reasons why I took this short. So with what I have discussed in this video, I believe I have helped you on how to trade this smart money concept, combining it with the price action, and then you can take perfect trades with this strategy. Now, all you have to do now is just to subscribe so you won't miss out on this type of video, because I'm going to keep on doing videos like this on how to make you profitable as a trader. So just let me know the video we should discuss next in our next video. Just drop it in the comment section, and I will see you all in my very next video.